Hi and welcome to Swiss Codes Daily Market Talk. It's Tuesday, February 25th. The geopolitical tensions remain on the headlines and influence global investment decisions from both financial investors and companies, and safe haven assets see increased inflows with gold leading the chart, pushing towards new heights. So the European stock market started the week near flat, while German companies gained back the early post-election gains, boosted by the hope that the new German government under Mr. Merz will relax spending rules and announce nail a special defense spending budget that could go up to 200 billion euros to take its own security in its own hands for the very first time since the Second World War, as the US is no longer willing to offer its military protection to Germany as war in Ukraine enters its third year. This is a big deal, guys. And I believe that given the geopolitical context of the moment, well, Mr. Merz could fairly easily form a coalition with whoever he wants and go ahead with his spending plans. It's worth noting that no matter if you are a left or a right party in Europe today, well, you better take that direction of higher military spending because you no longer have a choice. So, the military spending in Europe will likely be the next big theme of investment, especially in Europe, unfortunately, and should also be complemented with massive spending in technology and industry, ideally, because that is the only way, but the only way to gain independence from the US after decades, US which is no longer seen as being part of the club. How bad? How bad, right? But anyway, well, BAE Systems in the UK that's making big moves these days, big up and downs actually on the military shakeup in Europe, gained nearly 4% at yesterday's trading session after Merz won the elections in Germany. And as frustrating as it sounds, the outlook here is necessarily positive, as again, the Europeans aren't given any choice but to expand their military spending and rebuild their armies. As such, the German Rheinmetall is also doing great these days, especially since the election of Donald Trump. The stock actually gained more than 6.40% at yesterday's trading session and has doubled. Yes, it has doubled in value since Donald Trump's election. Just saying. And overall, well, defense theme funds are amassing an increased amount of funds since the war in Ukraine started, and inflows are seen accelerating into the new year, into this year and the next 4 years, probably with the upcoming efforts from the European countries to rebuild their militaries after, well, decades of not doing so. And of course, every penny that the Europeans will be spending on their defense budgets will be one less penny that will go into the other markets and other sectors, right? I mean, that's quite understandable. So that is maybe, but just maybe, what could accelerate the rotation trade from the US technology stocks to the European companies. We agree that US technology stocks and their products there are much more exciting and nice than military outputs, but even there, things are getting pretty political, mind you. I mean, your good old friend Facebook's father, Mr. Mark Zuckerberg, is having, well, quite close relationships with the White House in a very understandable manner from a political perspective to make sure that he doesn't get hurt over the next 4 years of Trump presidency. And well, yesterday, Apple's Tim Cook, he announced that he will be spending as much as half a trillion US dollars domestically in the US over the next 4 years and hire as much as 20,000 workers in the US to produce AI service. Apple eked out a meager 0.63% gain yesterday and quite a bearish session for the others. So the knee-jerk reaction to the news was quite positive from investors, but the geopolitically backed investment motives could destroy investor value in the medium to long run. And the decisions that are made between today and the end of Donald Trump's term will obviously have consequences going beyond the 4 year term, and making AI service in the US just to avoid the Trump tariffs looks like Well, a good decision to navigate the short-term geopolitical waters that are getting, well, agitated, but doesn't sound ideal for the long-run investor value. Now, you could argue that Apple could return its production where it would ideally place it once Trump is gone, but will the damage be done? I guess time will tell. Now, zooming out, as I said earlier, the major US indices traded in the reds in Monday's trading session, and sell-off accelerated into the session. And the S&P 500 slipped below its 50-day moving average yesterday and closed the session below the 6,000 psychological mark. Nasdaq 100 also cleared its own 50-day moving average. Microsoft fell more than 1% yesterday on news that they are, well, canceling some leases for US data center capacity, which actually raised concerns that the company could be in an oversupply position and may have overestimated its demand for AI previously. So that obviously casts a terrible doubt in AI investors' minds, given that the past 2 years rally in big technology stocks is mostly based on this expectation that the demand on AI would explode and the companies would rather struggle with limited capacity issues rather than overcapacity. As such, well, Nvidia also took a 3% hit yesterday. The company will be reporting its fourth quarter earnings tomorrow after the bell, and they better look good to limit a further sell-off in the share's price. Well, we will be covering Nvidia earnings in detail tomorrow, but note that the expectations for Nvidia's fourth quarter earnings and its forecast are expected to be strong still. It's just that the overall market environment is getting somehow murkier. Now, as the US technology companies are announcing plans to invest in the US to please Mr. Trump, while Chinese equivalents are doing quite the same thing. So Alibaba also announced that it will be spending more than 50 billion US dollars in AI infrastructure in the next 3 years. Now, Alibaba shares dropped 10% in New York trading yesterday, but spending is how the Chinese technology giants will be staying in the AI race, right? As such, I actually think that the price steps could be interesting opportunities to strengthen long positions for, well, investors who bet that the Chinese big technology companies will continue to rally, as Alibaba's cloud service, for example, will probably benefit from the developments of AI, while Cambricon Technologies, which is the leading AI chip designer in China, continues to push higher. The stock is up by more than 280% since September, and by judging on how Nvidia performed over the past 2 years on AI demand, well, the rally could develop further. Zooming out, the Chinese CSI 300 index recovered a part of early losses today, which were mostly on news that Donald Trump told a government committee to crack down on Chinese investment in US technology, energy, and other critical sectors, and is also pushing Mexico to slap tariffs on Chinese imports to, well, after Chinese firms have shifted production there to, well, to dodge the very duties that Donald Trump put in place during his first term in the White House. Anyway, his worsening geopolitical picture and the worsening trade outlook across the globe boosts appetite for safer pockets of the market, obviously. As such, the US 10-year yield pushed below the 4.40% mark yesterday. Gold advanced to a fresh record high, while the US dollar rebounded from the lowest level since December. The euro dollar, on the other hand, returned below the 105 psychological level, but is better bid this morning, while cable has so far failed to clear offers near the 126.50 level that matches the 100-day moving average and the major 38.2% Fibonacci retracement there. In the actual geopolitical setup, gold, in my opinion, is certainly a better hedge than the US dollar and treasuries, given that the US is being not so kind to the rest of the world. And speaking of geopolitics, US crude extends rebound today after approaching the critical $70 per barrel support last Friday. And the rebound is on news that Trump government imposed new sanctions on oil brokers and ships that were linked to illicit Iranian crude. But the worsening global economic outlook on the back of these rising trade tensions in the US with the US will likely keep the upside limited in oil prices. So this is all for today. I'm Ipeka Skardishkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.